Splendid evening it is to you viewers. Welcome to Special Focus right here on Equity Access, your area of perspective on stock market developments and on developments in the Zimbabwean economy. I'm Ibn Mabunda. Let's go. On Special Focus tonight, National Tire Services, a listed company on the local bourse, said they're quite optimistic getting into the year 2019 despite the prevailing foreign currency shortages that have hampered a lot of businesses in the country. Well, in an interview with Equity Access, the managing director of NTS, Mr. Kennedy Mandelani, said that the festive period was particularly good for them as they did record growth in terms of their revenue in the festive season in question. At the same time, they did also indicate that they've completed refurbishment of their flagship at Seke branch, which is their initiative towards getting their centers to be at that world-class level. They also have intentions of spreading this to 12 other branches across the country. He also added that the company has installed the SAP Enterprise Resource Planning System to enhance its ability to conduct complex business transactions and enhance customer service. Well, there you have it. They've engaged in IT initiatives to actually enhance their ability to service their customers. Well, they have a 31st of March year end, so we look forward to the presentation of their financial results in that regard. Vast Resources, a listed company on the alternative investment market in London with mining engagements in Zimbabwe as well as Romania, said they are optimistic of their license issues to do with Zimbabwe. This followed questions raised across the board following the issuance of mining licenses in the diamond sector to Arosa, which is the world's leading diamond producer from Russia, as well as Anjin, a player from China, who were recently given diamond mining licenses by the government. So questions are being asked, are they lagging behind? Are they still on board? And well, through their website, they said they're very much on board and they're optimistic of their mining pursuits where Zimbabwe is concerned. Story being, they have a joint venture with Red Mercury, which owns a diamond mining concession with Zimunya Marange Share Ownership Trust. So where that is concerned, they're also confident that they should be able to secure their own license for them to continue with mining engagements in Zimbabwe. At the same time, questions are being asked as to whether they are fit to proceed given the prevailing macroeconomic conditions in Zimbabwe. In response, they said they're quite confident and they're confident that the president of Zimbabwe should be able to quell the prevailing economic storm. At the same time, there is also an issue to do with a £1 million vehicle investment fund, so to say, set for Zimbabwe. They have put that on hold as they are waiting to see a clear path with regards to the license as well as a better economic environment in Zimbabwe. Plus, Bindura Nickel Corporation reports improved working capital position, recovering from a negative $10.7 million deficit in March of 2018, and now they are at a negative 4.6 million in that regard, which is quite a positive. And they also did mention that they have been able to service their bonds in that regard despite operating in a negative working capital environment. Well, to do with Bindura Nickel is also an issue to do with the smelter, which is 83% complete. Well, when initially they got into this smelter project, they expected nickel prices to be on an increase, but that has not been the case, as in recent years commodity prices have been perhaps in a negative, and so they expect that should the prices increase of the commodities, particularly nickel, they then should be able to carry on with the completion of that smelter in question. And then also on the show, we will have a look at the influence of governance on foreign direct investment, particularly in Zimbabwe, against the performance of that particular index in other countries. For a conversation on these and other issues, I'm joined in studio by our resident analyst, SPec Gwenzi. SPec, good evening and welcome to the show.
My pleasure, thank you.
Splendid. Let's get on to it. National Tire Services optimistic getting into the year 2019, recording growth in revenue over the past festive period. What is the significance of that?
Yeah, it's optimism based on what they believe are fundamental changes that are likely to come in the economy based on the austerity measures that government has put in place. I think they're basing their optimism on the TSP, which is a 2-year plan where the minister has promised to cut back on government's excesses and to live within the means and to stem the budget deficit and restore sanity on the fiscal side. Quite a condition which has not been there in years past. But it remains to be seen whether that can be achieved or not, given the other developments that have emerged in the economy, especially from an inflationary perspective, from industry shutdown and so forth. These are likely to derail GDP, affect consumption, affect disposable incomes. The 2% tax is also likely to affect the spend that people are able to utilize on goods and services. So all that can be it can cause immediate shocks to the economy. So it remains to be seen whether it's really something worth pinning their hopes on. But I think they have mentioned critically that the first 3 months, the first periods of the year, which is just a few weeks into the year, things are not looking so good. Sales are down on a comparative basis, but the prior year finished on a very good note according to what the company is saying.
Could they also not reel from the lifting of the statutory instrument 122?
The tire business is definitely subject to such market vagaries. Why? Because they sell a commodity which is definitely subjected to pressure from imports, but they mainly service a high-end market, and I think there is less pressure from the high end in terms of elasticity. When price moves, demand usually remains right static at the top end of the curve. But I think they will still feel the pressure. It's likely that SA products will definitely be coming more and more into Zim, but their product has not been part of the list of the goods that have been let to come in terms of the SSI that has been suspended in terms of local production. Okay.
Moving on to vast resources. They're quite optimistic. Are these questions being raised over the issue of their licenses valid? Are they not valid? Because, I mean, 2 licenses have already been issued. Is there a possibility of another license to be issued, despite their optimism?
I don't think government ever put out a statement to say this is exclusive. I think it's just speculation to say these are the big names that have been thrown around, Anjin specifically because they have been in that field before. And for Alrosa, it's mainly because they are the biggest player in the world, and the government has just been visiting the East European nation, that is Russia. So I think these 2 made headlines simply because of their significance in terms of the recent engagement, Zim to Russia, and also the prior China-Zim relationship, and that Anjin itself has been operating in Zim. So I don't think it's really exclusive to base one speculation based on that. And VAST says we have already been engaging authorities, and I think there's room to have more players come into that space. But as we have mentioned in some of our previous engagements, the terrain in Zimbabwe right now, it needs players who are quite serious, players who can last the mile. And I believe VAST, given that they are listed in a global bourse, they might be able to put together resources which can extract the kind of diamond that is now there in Zimbabwe, which is the industrial diamond. So there's opportunity for them to come into that space. And clearly, given a capacity of 25% of global supply and the world's most expansive asset base in terms of diamond, I think we can accommodate quite a number of players. But what we have to be more specific about is to really look at the nature of the players that we allow into that space. But given the right players, we must be able to come back on our feet again, and clearly there is room for more players even beyond VAST itself. So their optimism is really based on strengthening fundamentals, that is in due course. But at the present moment, they've really indeed put a caution to say, up until there's clarity in terms of 1, 2, 3, we might not be. It's they need to make sure that the investment is protected, the nature of how the money is moved, and the nature of how they can repatriate. They need clarity on those issues, and clearly there are issues to do with the currency in Zimbabwe right now, and it would be naive for one to just come and put in money without knowing, without
the
having
direction
a clear,
that
that the currency issue is going to take,
Okay.
and whether you'll be able to repatriate your profits or not, because some of these monies will be borrowed, they need to be repaid. You need to be getting something out of the investment in order for you to repay the guys who are giving you that capital. So I think just like any investor elsewhere, there is much opportunities in Zimbabwe, but adjusted for risk at the moment, the return might not be as lucrative. Somebody needs to clearly wait and see, which is what most investors are doing right now. But there are opportunities, and I'm sure VAST is ready to exploit those opportunities once a clear sign in terms of the direction the economy is going to take becomes even more clearer.
Fair enough. Moving on to another miner, Bindura Nickel Corporation. Well, they have improved their net working capital position, coming from a deficit of 10.7 million. Now they are sitting at a deficit of $4.7 million, and they're quite optimistic, saying that, look, in the period where we have not been stable in that regard, we've still been able to service our bonds.
I'm not sure what you are referring to as a deficit in this
in terms of their working capital position, because they've been operating with a deficit, where their net assets have been actually in the negative.
Okay, so the situation with Bindura is that they are coming from a very difficult position since 2015. Prices have not been firm on the global markets, and therefore the cash flow generation has also dipped with the company's fortunes in terms of revenue and profitability. Then getting lately into 2017, we started to hear issues about asset stripping, where the board then externalized certain funds which belonged to the group, and they might have been caught in that fire as well. So it has been very difficult for them to stabilize from working capital position perspective. And so what they're saying is, look, despite the situation, we have really been able to meet our obligations, because what is key, despite you being in a technical liquidity position of sort, what's important is for you to be able to meet your dues, and they have been able to meet. And the key demands were the bondholders' money, which they've been able to repay as per contract, and other obligations as well. So I think it's a recovery situation, but within that negative working capital position, there are other non-monetary costs as well, which might need to be adjusted. And I'm sure as years go by, as we get into the next period, it starts ironing out, and we are likely to see a return back to normalcy in the current 2019 financial year.
Okay. Well, of course, there is the smelter issue that is fixated on the prices of commodities, particularly nickel in this particular scenario. What do you think is going to happen going forward? Do you think that we're going to see stability in terms of their commodity prices, and perhaps we could see the completion of their smelter? I mean, it's been 83%.
I'm failing to grasp what you mean by stability, because you can have stability at any price point.
Okay.
You can have stability at 2,000. You can have stability at 9,000. So
okay, to perhaps shed light, when they did set out this particular project, the smelter, to increase their productive capacity, they expected the nickel prices to have soared steadily over the past.
How steady and to what level? I think maybe that's what we may need to discuss.
Initially, they were coming from about $11,000 per kilo, and they anticipated per ton, and they anticipated that by this time we should have been reaching levels of about 16,000 tons in that regard. But still, that has not materialized. I think the last figure I got was just below 12,000 per ton, and so that has stalled their progress in that regard to actually get on with the completion of that project, as it would not be viable in terms of a cost benefit setup.
Yeah, that's what the company said, that we might not be able to complete it, given that the global prices at the current level are not favorable for us to really start smelting our own produce. Even if we might take third-party produce, we might still not be able to reach the critical capacity as well as the price level to really come out with the benefit out of the project. So what I then failed to grasp is that when they undertook to raise the 26 million from through a bond issuance and also on resources, I failed to understand whether they could not project actual price estimates going forward, because in 2014, in as much as the prices were firm and there were projections that prices might remain firm in the so immediate future, I believe it would have been fair for them to do an actual study to see what volatilities are there, and to put a moderation in terms of their expectations that would have given them a clearer picture in terms of where the prices are going. Because I'm sure they did not last at those 16,000 levels, and sooner they went back below that price. And right now you've got almost 20 million which is stuck in a smelter which is not operational, and yet you're paying interest and whatnot, and the opportunity cost tends to even be far much higher. So I believe that was wrong on the part of the management, and they should own up to it. But it's a cost already incurred. What's important right now is to make sure that whatever forecast or estimates that you make on the future, you put in quite an honest analysis, and you also get to undertake things based on quite some good facts. But one thing, they have been able to reduce their costs in terms of their all-in sustaining costs to levels below $7,000 a ton, and I think they're getting somewhat between 9,000 and 10,000 adjusted for part of the money which goes to a third party which sells the product on behalf of them. So I think they've done fairly well, but for prices to recover to those levels, it might take time, but there's optimism in terms of where the price is going. Nickel is believed to have a component of what is it called? One of the key inputs in terms of electrical vehicle batteries. So there is definitely optimism in the near term in terms of increased demand for nickel going forward. So I think that can augur well with them, and maybe that will restore prices to those levels. But this is a period of we need to start looking at that beyond 2025 to start saying how is nickel responding to demand in electrical vehicles and the batteries that are used in those electrical vehicles. That's when we might then start to see the smelter coming back on board. But it is the only integrated refinery smelter in Africa, and it also takes third-party met, and it's likely to unlock a significant value to Bindura once it starts running, and we might see revenue even going beyond the current, doubling from the current levels, and that's really a huge gain in the mid to long term for Bindura shareholders.
Okay, quite insightful. As we progress, let's talk about the influence of governance on foreign direct investment in Zimbabwe, because I think the figures that we tend to have recorded are indicative of how things play out at a corporate governance level. In 2000 and 2016, we had foreign direct investment of just below $450 million. That then went down in 2017 to just below $300 million, which is quite a significant dip in that regard. But of course, the 2018 figures are not yet out. We can expect them by about mid-year, thereabout, from different bodies, should I say. So I'm saying, how has been the significance of governance on the FDI that we have received over the years? Perhaps I could shed more light and perhaps have us look at one or two figures that could be instrumental to us as we make comparison. Then this is Zimbabwe, which is right at the bottom, starting from 1990 right up until 2015, and then just right above it is Mozambique, our neighbor to the east. We can see that we seemed to have been just above them initially, but as we got to about 2005, there we see an increase in where Mozambique is concerned, as well as the same can be said for Rwanda, as well as for Zambia. But where Zimbabwe is concerned, we have been in the negative. Maybe just to try and give a bit of a narrative to how things have played out here.
But what I'm failing to get here is how you have pinned Zimbabwe's FDI performance to governance. Because if you have checked your figures well, you could have unearthed that the decline from beyond 2015 was not only to Zimbabwe. If you had checked your figures well, you could see clearly here that the 2015 figure for the rest of Africa was quite at this level, and it started falling for the rest of the region. And this has clearly nothing to do with Zimbabwe. And also from this chart, you can also see that there is really quite a sharp dive in all economies in 2016 going forward. So this might speak to how global capital started reacting to certain fundamentals outside of Zimbabwe in that respect. So I think governance get to be an issue if you broadly appreciate that FDI is a function of other factors that might not be exogenous but rather endogenous. They might be independent of what Zimbabwe makes of its own.
Hold on a second, Chris. Yes, correct in that the decline that we've experienced over the past few years has been in line with what has also been taking place on the continent. I agree with you on that. But where the performance of other countries are concerned, I'll give a very good example. Rwanda. At the World Economic Forum, in a conversation that involved the CE of the Rockefeller Foundation, as well as the MD of the International Monetary Fund, they did commend Paul Kagame, the president of Rwanda, for having steered Rwanda on a correct, or should I say, on a positive trajectory, which has actually seen Rwanda get to progress where the economy is concerned. Just to cite perhaps an index that would be perhaps of interest, on the Ease of Doing Business Index in the world, Rwanda is ranked 27 out of 190 countries. Zimbabwe is ranked 155, while Zambia, our neighbor to the north, is ranked 86 and Botswana 87 respectively. So I'm saying what we are seeing here could be indicative of corporate governance issues in Zimbabwe. I'll justify.
I'm going to possibly interject on is trying to say everything that has happened to our FDI position is clearly based on governance. If it is a question to me, if it's your view that probably governance had a part to play, okay, I would definitely appreciate that. But also, I think you should have possibly, if the question would have come to me saying, why has Zimbabwe lacked the region? That's just a general question, and I'm sure I might attempt to respond to that.
Okay.
So I think it's our figures here are quite descriptive. From the period 1990 to 2000 thereabout, we can clearly see that we were moving together with the region. in as much as we were below the region, but we were in line.
Okay.
So if you're looking at, if you are trying to highlight a position from 2000 and from 1990 here, from 1990 right up to somewhere with around 2000. So fundamentals begin to change from an economic perspective.
Okay.
1997, 98, we have a Zim dollar crash. We see a bloated expenditure, government financing the DRC war, also giving war veterans a huge paycheck which was unbudgeted for. We are seeing a bloating fiscus position, and that led to the crashing of the local dollar. We also see a lot of governance issues coming to play. A dominant opposition has just been formed. There's a lot of thwarting of opposition forces. So that's where the divergence comes in.
Okay.
We're starting to see the rest of the region slightly picking up, but Zimbabwe remains constant. In fact, if we're using a smaller scale, you would actually see a bit of a decline in that regard.
Okay.
But when you start to compare with countries like Mozambique, it starts generating a lot of investor appetite. Investors are looking elsewhere in the region where they can get a good return. Rwanda starts to come in. It's beyond the genocide era, and there is a lot of prospects for growth in other regional countries. But I think South Africa is realizing the greatest share here in terms of FDI targeted for Southern Africa.
Okay.
And then we get to a period around 2005.
Right.
This is a new phase.
Right.
There is stability elsewhere, but there is definitely pandemonia in Zimbabwe.
Mm-hmm.
This is a period where hyperinflation is beginning to mount,
Okay.
going into 2008. So we really see Zimbabwe, moving in an opposite direction to the rest of the region. And obviously Zambia, obviously Mozambique, Rwanda, even Zambia are beginning to realize a good share out of FDI. FDI coming into those nations. And then we then get to this point, I think 2015, we start to see basically general region realizing a plunge in terms of FDI, realizable FDI. And Zimbabwe, of course, coming from a low base, it didn't suffer much. That's why we have a quite not so steep trend. Why? The US is just tightening its monetary policy. They're beginning to increase their interest rates. So that really makes US assets more favorable. So money is starting to flow back into US. Okay. So when they were doing their quantitative easing 2008 thereabout, they start to push money at zero interest rates. So investors are pushing money elsewhere into the global world, emerging markets, and obviously the sub-Saharan markets also begin to realize. This is where we are realizing the fastest growth, especially 2008 to 2015. So there's a tightening of the monetary policy in US, and obviously other European banks as well. ECB is also tightening its monetary policy, and money is coming back into US, okay, which is a safer haven, and the dollar is also firming, and there is the plunge. And I think also commodity prices are also beginning to feel a bit of a pressure. Now, to talk about governance issue and whether it really have had an impact on Zim.
Sure.
Yeah, there is a clear ease of doing business, which you have touched on. I think we have grossly lagged in terms of ease of doing business. The time that it takes to register a business, the tax regime is one of the highest in the region. Corruption index is very drastic, and I'm sure a latest report coming today shows that we have really gone back in terms of our corruption level. We've really gone up the ladder, which means we are becoming even worse off. And in as much as there's been progress in terms of ease of doing business, I think taxation remains one of the key issues. Remittances, how able are you as an investor to repatriate your funds, is also key. So Zimbabwe clearly is in a league of its own, whereas the rest of the region has benefited from FDI. We are clearly in the doldrums based on our policies, and I'm sure in the past years, things to do with indigenization, negative investor sentiment driven by disregard of private property, and those international agreements. I think all that is militated to push Zimbabwe right at the edge, despite the significant opportunities that are there within our economy.
Question then that I'd pose is, what then can we do to make Zimbabwe more favorable and perhaps encourage increased foreign direct investment? There are other countries that are doing quite well in that regard, to cite Ethiopia, Zambia, and of course Rwanda. What can we do as a country with what's happening, with what besets Zimbabwe, to set Zimbabwe on a right trajectory in that respect?
Yeah, that's really a critical question. I think we really need to interrogate that. But if you are to look at the crisis that we have at the present moment, we are faced with a double-barreled crisis. A crisis of we are faced with a crisis of confidence.
Okay.
A crisis of cash flow in terms of investment cash flow.
Okay.
A crisis in terms of corruption and so forth, even policy as well. So what I think we need to really focus on right now is to focus on the low-hanging fruits. Low-hanging fruits are things that we can do irrespective of other people's influences. I believe the person who first have to believe in the Zimbabwean story is you and me. Okay. But then government has to make sure that it liaises, or it it puts or it engages into a moral suasion with the populace.
Okay.
This involves what we call a social contract. You need to engage, you need to come to terms with the populace to share a common view in terms of where you're going.
Okay.
The hardships that you're likely to face. You have to agree on the nature of the pain that you're about to endure. Of course, as a leader, sometimes you lead the way, people might get it over time. But I believe it is critical to have a social contract.
Okay.
You don't go looking for FDI or start to looking for investments outside the country. You start to look for investments within the country. You've got players like Delta who have got parents outside Zim.
Okay.
AB InBev is a big company which, if it really believes our nation's story, it can do something. And we've got a lot of other players who are at that level, who are already invested in Zim. Those are the low-hanging fruits.
Okay.
But they also need to have security of their funds. They need to know that when their dividends are declared, they can receive them. When they need to move their money, they should move the money freely. Confidence starts here, right here at home. So I believe that's the first thing we should do. A social contract. As Zimbabweans, we need to be at par, not just in terms of how the economy should be run, but even in terms of the political aspect.
Okay.
We need to be at par. I might not be privileged to dig further into the political scenarios, but I believe a social contract just involves having the same objectives, the same goals, the same understandings, and even sharing the vision, so that when pain comes, such as when you increase tax or when you increase price of fuel, people know, they get prepared in terms of where you want to, what you have to incur to get you to where you want to go. So there is lack of that. And when it comes to policies that deals with the outside world, we have had a lot of inconsistencies in the past. Do people really know what they have to incur in order to start mining in Zim. The 51%, is it the right thing to do? That you have to see this.
Okay.
There are a lot of economies that are obviously improvising something of that sort.
Yeah,
but is it nurtured is it fashioned in the right way, that is communicated properly?
Yeah, I read a report that said Zimbabwe was the worst place to actually engage in mining globally.
Exactly. Why? Because we have set a precedent. In 2016, government abruptly forced miners to stop mining in Chiato. Of course, there were issues, political or otherwise, but really, that kind of scenario unsettles miners. Why? Because you have already declared that all the land in the country belongs to the state, so we can compulsorily acquire it.
Okay.
Zimplats, a big mining player, in fact, one of the biggest mining players in Zimbabwe, works up and be told, we are taking 20-something thousand hectares of your land that you are not utilizing, and we are giving it to someone else. A protracted fight in the courts ensues for quite some years. What image are you sending to the rest of the world? So it has to be clear. There have to be clarity of policy measures. Beyond clarity, there has to be consistency of policy measures. You can be clear, but you can be flip-flopping in your clarity. You can be clear that you want to acquire, and you acquire something. But then you wake up tomorrow and change direction, even though you might be clear on that different direction that you're taking.
Okay.
So there is clarity, and there is also consistency.
Okay. Consistency where policy is concerned, as well as clarity, you said. But I'll ask you this one. In the past, we had a crisis that was political. I'm asking this because you did mention the word politics. We had a crisis 2008, 2009, and we had a government of national unity. And the figures really did look good for Zimbabwe in terms of the GDP, in terms of even the foreign direct investment. We actually were on an upward trajectory in that respect. Past or post the government of national unity, then the fundamentals started perhaps taking on a negative path. So I'm saying, with the way things are in Zimbabwe, is this not perhaps the point for us to be engaging in sort of political dialogue? I mean, Kenya has had to engage in dialogue, and that has actually seen the economy coming to a positive. So I'm saying, is this not the point where the president should perhaps engage members of the opposition for dialogue with the interest of furthering or bettering the Zimbabwean economy?
So dialogue is a component within what I have termed social contract.
Okay.
A social contract is where you engage to share a vision and to share a common path.
Okay.
So political dialogue or otherwise any other dialogue with respect to policies and whatnot is composed of what's within a social contract.
Yes.
Which can be done through moral suasion, political engagements, or such other measures, tripartite negotiating forums,
okay,
and so forth and so forth. In terms of clearly who should be reaching out to who, I think everything is quite clear from the political perspective. But beyond the politics of the day, we've always had this lack of foreign direct investment for quite some time. Even during the GNU years, we were on a growth trajectory, but we were still lagging the rest of the region in terms of levels. So I still believe that it's also a thing to do with our other policies other than the political crisis.
Okay.
But politics plays a big role. The biggest player, which is the United States, is quite clear in terms of what it says. Human rights must be observed. Okay. Human rights standards must be maintained globally, and these guys have put in sanctions on Zim, and if Zim is not going to play ball, it means it will be difficult for us to attract business to companies or countries that are linked to United States. So obviously human rights and politics plays a key role, and there's definitely need to relook into that and see what amount of giving in can we do, or in fact reconciliation can we bring in. That is if it really benefits our country. But key being policies, we really have to sit down fashion policies that makes business attractive. I believe increasing taxes haphazardly, an inflationary environment, a weaker exchange rate, failure to repatriate, a fixed exchange rate regime.
Okay.
All those are clear economic matters that affect foreign direct investments that remain not interrogated, and
Okay.
it's the mandate of the government of the day to see to it that they do it. And without doing that, I think we are likely to remain in that state, or even to get worse off. I believe the past week has been very clear in terms of what the global perception is in terms of of Zimbabwe. The president was all over the world, Europe specifically, key allies, but we didn't come out of it with something. And at that very time, South Africa comes and says, we're not going to give you anything, we don't have that kind of money. But who knows, there is no clear business case for Zim. There is a clear negative risk-adjusted return, which is what Mutuli has not been clear enough to say. Of course, the return, if not adjusted for risk, is positive in Zimbabwe. I mean, we've got a lot of opportunities, but when you then factor in the risk to come out with a risk-adjusted return, you might find yourself in the negatives, and you would rather say, no, in as much as this return may give me 12%, but then when you then realize that inflation is rising at a higher rate, you cannot also even repatriate the very money that you've put. I mean, your return becomes negative. So a lot of fundamental issues on the economic side needs to be sorted out first before we can really become a beneficiary of all those monies that are being directed to Africa.
Okay, fair enough. Respect, we have to go. Thank you so much for those insightful thoughts. Thank you for watching, and thank you for being with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website www.equityaccess.net. From Respect and I, thank you, and asante sana.